How do you create yield with XRP? As far as the returns that we pay people today, the way that that's structured, we've mitigated all counterparty risk and we've mitigated all volatility risk. There is still risk in the investment itself. The strategies that we run could lose money over a quarter, and we would have to sell a small amount of XRP to be able to cover those losses if that had taken place. It did take place the first quarter for the growth fund, but then the next month we made 5% and bought more than we had sold. So I'm trying not to make any representations of anything that aren't correct here. What we do is we aggregate the asset. You sign a subscription agreement to the hedge fund. We pool that. It stays in institutional custody. That value is then reflected off of the institutional custody account onto the counterparty exchange. So if the exchange went bankrupt or our partners have problems or whatever happens, the assets are still on our side in the account. So we mitigated counterparty risk. Now, the way we mitigate volatility risk is that reflected value, we draw a line of margin against it, and we only ever trade 40, 50% of that line of margin. So if there is volatility in the market like there was on 1010, they get out of positions and there's no capital called away. And that worked perfectly. We had no XRP called away on 1010, which was the largest liquidation that's ever happened in crypto, 9 times larger than Luna. So I was extremely happy. Like everything that we put in place worked perfectly. We actually made money in the income fund on 1010 because we had short positions open on the market. Both of these sub-advisors that we work with to be able to manage these market neutral strategies to generate returns have track records of 5 and 6 years in length, and the returns over that period are somewhere between 20 and 40% a year. Most of the time I would be skeptical of those types of returns, but they are audited by KPMG and Deloitte. They're legit. Like we went through 25 different people when we were looking for these two that we started working with, and we did due diligence on tons of them, and we found these two that were actually like the real deal. And so again, you're not ever going to get that 20 to 40% because we only get 80% margin against the XRP. And we only ever trade about 50% of that line of margin in the strategies. So that's why, we're projecting somewhere between 5 and 20% a year on these strategies that we're going to be able to pay to our investors, which is, if you're mitigating all those risks, and there's just a little bit like on a risk curve, 1 to 10, I would say the risk is about a 1.8. There is a small amount of risk, but it's very low in comparison to, any of the other opportunities in the market, in my opinion. If you're participating in a smart contract of any kind, I think your risk is at least 1.8. If you're giving up the asset to any other counterparty, there's counterparty risk. The smart contract could be hacked. There's no insurance on the smart contract. And that's why we haven't participated in DeFi quite yet, but we will be in the near future as we shore up those risks as well.